Good morning, traders, and welcome back to It's Crypto's trading channel. In this video, I'm going to be performing a multi-time frame price action analysis on the situation we are currently seeing on ZECUSDT, so Zcash, because things are lining up for a potential trading opportunity. So as always, we're going to keep this video as educational as possible, starting here on the monthly time frame. So here on the monthly time frame, the market has broken above this monthly resistance. So we have previous monthly resistance here. The market broke it to the upside, which was followed by a correction, exactly as you would expect, to retest previous resistance as new support. And we can see there is a strong reaction from buyers at this zone. Every time the market comes down to this zone, buyers step in and push prices higher. That shows us that this is a strong level of monthly demand. Also, what we can see here on the monthly time frame is the market has had this W formation. We have this very clear W formation here, and as you all know, if you follow our videos, after a W formation, you would expect the market to complete the pattern at the neckline, which is previous resistance turned support, and that's exactly what the market has done here. One thing we have to notice is this monthly candle, this previous monthly candle, closed with a bearish engulfing. Now, this is a corrective move, but is a very steep correction. This monthly candle engulfed the previous monthly candle. This shows us that bears were very strong in this move to the downside. So what we have to be cautious of, we have to be cautious of another retest of this demand zone before we see the continuation to the upside. With that being said, let's drop down to the weekly time frame. Going down on the weekly time frame, as I just mentioned, this correction is very sharp. We can identify that here on the weekly, the market broke below weekly support. Why is this weekly support? Because we have previous weekly resistance here, The market broke and closed above this zone. Then the market came down for a retest, but instead of retesting this previous resistance that should have acted as support at this zone, the market broke this zone to the downside. We broke this support to the downside, and we are now retesting it once again as resistance all across this zone, and we rejected it to the downside. One very important candle which we have to notice here is this previous weekly candle which closed yesterday. We have this candle, this bearish candle here with a large red body, a large bearish body, and a large wick. And if you follow our videos, you'll know that we expect this candle the next candles to fill in this wick. This is a pattern that happens over and over again within the markets. So we do expect a deeper correction to retest this level of demand. We also have this head and shoulders formation with the head, left shoulder, and right shoulder. We also have this candle here when we expect the next candles to fill in the wick. So we do have a lot of short-term bearish confluence here on ZECUSDT. Let's drop now to the daily time frame, clean our charts, and see what we can see from a daily perspective. So here on the daily time frame, the market has recently broken below this level of support. So we had a clear level of support all across this zone. The market broke below this zone with this impulse. If we zoom in here, we have this bearish impulse from this high to this low, which broke below this level of support. Now, after an impulse, what you can expect is the market to make a retracement. We have a bearish impulse and a bearish correction, and we expect the market from here to make the continuation to the downside and potentially fill in this weekly wick and potentially go and test the level of monthly demand we've already identified. So we have a bearish monthly, weekly, and daily time frame, and when all of these time frames are aligning in the same direction, this is what gives you the highest probability of a trade. One very important thing that we have to notice here on the daily time frame is we have this candle here. You see with this large bullish candle with a large wick, and you can see the next candles are starting to fill in this wick exactly as we would expect. So we have the possibility of coming up to this wick, which would be a fake out, because if ZEC breaks back above this zone, a lot of bulls will enter the market, but we have a bearish bias from higher time frames. So this is the key area to identify. If we take our Fibonacci from the high to the low of the bearish impulse, we can see that the market is currently correcting to exactly the golden ratio, the 0.618, and it hasn't closed above the 0.786 because this would invalidate this correction. But is likely today we fill in this wick, trap bulls all inside of this area, and this is where we will be looking to short. If we take our Fibonacci from the high to the low of the correction, the minus 0.272 will be our downside target. of around $120. So how will we be approaching this with students? If we drop down to the 4-hour time frame, we can see that the market is about to break above this zone and fill in the wick exactly as we would expect. If we draw in this descending trend line here, we can see that the market is about to break this zone. This will induce bulls into the market. So what I'm looking for here is the market to go and fill in the wick, induce bulls, come back down for a retest. And if we have this pattern, which is one of our patterns we like to use a lot, if we have this overextended M formation, which induces bulls into the market, and we see the correct confirmations all inside of this zone here on the lower time frames. So we look for this pattern on this time frame, and then we drop down to the 1 hour and the half-hour time frames, the 30-minute time frames, to look for a valid entry according to our rules. So if the market fills in the daily wick at first, and then we see signs of rejection all inside of this area, this is where we will be looking for a shorting position. Our target, I've already identified the minus 0.272 Fibonacci taken from the daily correction high to low. The stop loss will go well protected below above any structure, and this will give us a nice potential 1 to 2 or 1 to 3 risk to reward, potential 200 or 300% RR on this position. And this is what I expect from the short term. If, however, the market doesn't fill in this wick and fails to break above this zone, what we will then be doing is waiting for the market to break below this 4-hour support, and then we can look for a short inside of this area. This is our trading plan on ZECUSDT. If the daily candle closes above this zone here, so if the daily candle closes above this zone, this will completely invalidate this setup. So we have to monitor this one and wait for the market to satisfy our entry rules before we can potentially capitalize on this setup.